Can you hear us?
Yeah, I can hear you.
So, because I will give you a go ahead when we can start this.
Yeah.
Because you can go live in 3, 2, 1.
Dear friends, wish you a very warm evening and welcome to the webinar for the launch of Navi Finserv Limited's public issue of secured, rated, listed, redeemable, non-convertible debentures. I, Vikas Agarwal, representing JM Financial, welcome you all to this enriching session. Representing the company, we have with us Mr. Ankit Agrawal, Managing Director, and Mr. Shobhit Agrawal, the Head of Lending. Mr. Ankit Agrawal holds a bachelor's degree in computer science and engineering from Indian Institute of Technology, Delhi, and a master's degree in management from Indian Institute of Management, Ahmedabad. He was previously associated with Bank of America as a director in global banking and markets. He was also associated with Deutsche Bank as their vice president. Mr. Shobhit Agrawal is a chartered accountant who oversees Navi Finserv Limited's loan and borrowing divisions. He has valuable experience of over 15 years in the field of corporate finance and banking. Throughout his career, he has worked for prominent institutions such as Deutsche Bank and Standard Chartered Bank, where he was exposed to the areas of corporate banking, structured finance, acquisition financing, trading, and private equity. Speaking about the company, Navi Finserv Limited is a non-deposit taking, systematically important NBFC, registered with RBI and a wholly owned subsidiary of Navi Technologies Limited. It acquired its current brand name in June 2020 after getting acquired by Mr. Sachin Bansal-led Navi Technologies Limited in October 2019. The promoter company, Navi Technologies Limited, is a technology-driven financial products and services company in India, focusing on the digitally connected young middle-class population of India. Navi Technologies has adopted a mobile-first approach, utilizing its strong in-house technology and product expertise to build customer-centric products. Navi Technologies is also involved in general insurance business through its subsidiary Navi General Insurance Limited, and also operates its asset management business through its subsidiary Navi AMC Limited. Navi Finserv Limited offers loan under two broad categories: personal loans and home loans. It launched personal loan product under the Navi brand in April 2020. Under this business, it extends instant personal loans up to Rs 20 lakh with tenor of up to 7 years through an entirely digital Navi app only process. As of September 30, 2023, personal loan business had an AUM of over Rs 6,700 crores. Navi's home loan product was launched under Navi brand in Feb 2021. As of September 23, it had disbursed home loans across 10 cities in India. It offers loan up to Rs 10 crores with a tenor of up to 40 years. As of September 2023, the company had an AUM under home loans product of over Rs 725 crores. On financial front, Navi Finserv clocked total revenue of Rs 1,377 crores in fiscal year 2023 with profit after tax of Rs 172 crores. For 9 months ended December 31, 2023, total income was Rs 2076 crores with a PAT of Rs 629 crores. As you are all aware, the first two public issues of NCDs of Navi Finserv Limited were great success. Following the same, the company is now coming up with this third public issue of NCDs. May I now draw your attention to the structure of Navi Finserv's third public issue of NCD. These NCDs are secured, rated and listed. The issue is of size Rs 600 crores, which consists of base issue of 300 crores and a green shoe option of 300 crores. Issue will open on Monday, 26 February 2024 and is scheduled to close on Thursday, 7th March 2024 with an option of early close on achieving expected subscription. Allotment shall be made on first come, first served basis. NCDs are proposed to to be issued and rated under CRISIL A stable, which is rated by CRISIL Rating Limited. The NCDs will be offered under three tenors: 18 months, 27 months, and 36 months, with a monthly and an annual interest payment frequency option. There are total 5 series under the current issuance, with monthly interest option under 18 month, 27 month, and 36 month, which will be named under series 1, 2, and 4 respectively. And the annual interest payment option will be offered under 27 months and 36 months tenor, and will be under series 3 and 5 respectively. The NCD offers attractive effective yield in the range of 10.47 to 11.19 across all series. I earnestly appeal to all our partners to reach out to maximum number of investors in all the categories and let them have this opportunity to invest in such an attractive offering. We have allocated 30% to retail investors up to rupees 10 lakh application size, 25% for high net worth individuals for application size above rupees 10 lakhs, 25% for corporate category, and balance 20% for the institutional investors. The issue also provides option to retail individual investors bidding up to rupees 5 lakhs to apply through UPI mode. May I now request the company team to take us through the presentation and tell us more in detail about the business. Thank you.
Yeah, thanks for the introduction. Good evening, friends. It's nice to be in front of you again. This is our third issuance, and I think at this point we are much more confident about our business than ever before. And I'm happy to share some of the updates on the business since our last issuance. So on this slide, I think one change which has happened is now Navi Finserv doesn't have its subsidiary Chaitanya, which was a 100% subsidiary earlier. Chaitanya was engaged in the business of microfinance. But as you might know, we had sold off this business sometime in November last year. And so now the only lending business within Navi Finserv is the personal loan and the housing loan business that we have. We can move forward. So yeah, this talks about the key milestones that we have achieved within Navi Finserv. I think the first cash loans was disbursed in May 2020. We have come a long way since then, almost close to 4 years now. And we have, and within that period of time, we also launched our housing business. Now, both these businesses have scaled up well. We have crossed more than 10,000 crores of AUM during this period. And there have been various other milestones. And I think some of these you might already be aware of. Ratings have been upgraded many a times during this period. Especially in the last 6 to 9 months, the main updates have been the sale of Chaitanya, which I've already talked about. And I think profitability is something which has also now increased quite a bit. So as you can see on the bottom of this chart, the PAT for this period was about 629 crores, which also includes one-time gain from Chaitanya. But without that also, we have been very profitable. The debt to equity ratio of 2.2 is our lowest ever in the recent past. And that is again because of the equity that the capital that we got from the sale. And that has also reflected in the capital adequacy of 27%. As you might know, RBI had raised risk weights for unsecured loans in Q3 last year. And there was some impact of that on our business also, since majority of our business is unsecured. But because of the sale of the transaction, our capital adequacy actually went up from what it was before. Earlier, we were close to 24 to 25%, and now we're close to 27%. Similarly, our net worth has also got a big boost from about 2,200 crores to now 2,800 crores. The gross NPAs have been stable at 2.7%. So as you can see, I think the profile of the company in terms of leverage, capital adequacy, net worth, AUM, profitability, I think it has improved on all fronts, and which makes us very confident about the company. We can move forward. Yeah, again, there are some metrics here again. I'll talk about some key ones, right? So asset under management as of September was 7,500 crores. We have totally disbursed close to 21 lakh loans in our, sorry, I think this is 21,000 crores of loans have been disbursed ever by us. And in home loans, we have disbursed about 1,178 crores of loans. In terms of our gross NPAs, have been pretty stable at 2.7%. Net NPAs are at 0.36%, which is also very low. Profitability has improved, net worth has improved. In terms of a liability profile, which we'll cover later in the presentation, it has also diversified and improved quite a lot. Now we have more than 34 term loan lenders. In terms of geographical presence of the company, we are present in almost 99% of PIN codes of India in personal loans and in home loans in 6 cities. So what this enables us is, for us, is that our portfolio is also very widely distributed, right? So we are not exposed to any concentration risk as such. Can move on. So now I'll hand it over to Shobit to cover something.
Thanks, Ankit. So we continue to operate in 2 lending lines, personal loan and housing loan. Housing loan is roughly 10% of our business and personal loan is the majority of it. We have registered decent growth. If you look at September 22 and September 23 AUM, growth is of roughly 20% on the PL side and around 40% on the HL side. So it's a healthy growth. It's not very aggressive, and it also demonstrates the kind of confidence that we have now in our infrastructure around collection, borrowing capability, and credit underwriting. Our disbursements have been range bound and they've been steady with the increased focus on operational efficiencies as well as profitability. As we speak today, our managed AUM has crossed 10,000 crores. And more than 25% of it sits outside balance sheet in form of either direct assignment or co-lending. If we move to, so this is a section on the personal loans. Business has largely remained similar, but it has scaled up since our last issuance. Processes are exactly same. They are completely digital in nature. The only thing that we've introduced in last 9 months is the video KYC process, which is mandated by RBI for personal loan business. And we continue to get applications from 99% of the PIN codes. We are doing business in 85% of the PIN codes. Turnaround time is less than 10 minutes. Our customer profile is largely consistent. Today, 90% of our customers are more than CIBIL score 725, which is a prime category. And new to credit is a very, very insignificant amount in our overall AUM. We continue to have a robust mix of app as well as on-field presence in terms of collection and app in terms of origination, underwriting, and servicing our customers. On our housing loans, our AUM as of September was 725 crores and today we have crossed 1,000 crores. Again, portfolio is largely similar. It's extremely healthy with very, very low level of delinquencies. Ticket size on an average is around 62 lakhs and loan to value is standing healthy at around 78%. We continue to solve those 3 major problems which we have identified when we started this business around manual application process, lack of transparency and clarity, and very long turnaround times from incumbents. So we continue to solve these problems and continue to attract high quality customers and increasing our scale almost on a monthly basis. I'll let Ankit talk about our strength and strategies a bit, and then maybe I'll cover the borrowings part after this.
You can move on. Yeah. So I think this slide talks about, and you might have seen it earlier as well. I think we pride ourselves on having a very good and stable, experienced management team, and most of these folks have been with us for some period of time. At the board level, we get very good advice, and I think our governance standards continue to be high. Mr. Sridharan, who has been SBI subsidiaries chairman, and Ms. Usha, who was also one of the partners at Big Four audit firms, they continue to provide us a lot of inputs in terms of our internal audit, internal controls, and other processes. And on the management team, as you can see, we have sort of a mix of people from tech and non-tech backgrounds, and most of these people have spent a significant amount. So this slide talks about how Navi's ecosystem is integrated, right? And how has it become sort of a flywheel? So as Navi's scale has improved over the last 3 years or so, we have collected more and more data about our customers and how they behave, right? And that data essentially helps our models becoming much better, which in turns lead to lower credit costs. And then once our credit costs are coming lower, we are also able to then pass on this benefit to customers in terms of lower prices, and essentially that makes for a better customer experience, and then we get more customers. So I think this flywheel has been sort of operating pretty well, right? And that's the reason why we have gained scale as well as better asset quality at the same time. We can move forward. Yeah, I think this talks about our customer journey and how customers can take app. As you might know, almost entirely our journey of taking a loan is digital, except for the video KYC process. Most of the process is straight through on the app. First, the customer comes onto the app, he can see his eligibility in terms of how much amount he's underwritten for. That we calculate based on a bunch of data that we get from various sources, and that processing happens in the background. Once the customer likes the offer and wants to proceed further, then there's a customer onboarding step where we will collect KYC documents and there's video KYC. And then after that, for housing, there is other kind of checks in terms of legal and technical, and then the final sanction comes. And the left hand side of the journey is about personal loan, and right hand side is about home loans. Shobit,
I'll take this. So, as you would appreciate that liability is as important as asset side in lending business, and we have been able to grow our liability franchise at the same pace, and of course with diversified instruments as well as lenders to reach this stage. Today, our 10,000 crore of AUM is supported by 6,300 crores kind of on balance sheet borrowing. And we have more than 34 institutional lenders who are supporting us on the term loan side. We are rated A stable by CRISIL and India Ratings, and our short-term rating is A1 by CARE and India Ratings. Today we are borrowing through mix of bilateral loans from banks and NBFCs, PTCs, which is a securitized instrument through treasury desk of banks, NBFCs, and family offices, and capital market instruments, which is through private placement as well as public issuance. We'll move to the next one. Yeah. So we did our first public issuance in June of 2022. Then we took 14 months to come up with our second public issuance, and our third public issuance is out there within 8 months. So we are able to reduce the time because of high acceptance of our paper, and of course our ability and our rangers' ability to place it in the market. We are deepening the franchise on the public issue of side. Then we have also been able to issue AAA rated instruments, PTCs, and we have done it with a large global bank in India. This is the first time that we have done a transaction like this in the month of August 2023, and we continue to raise a lot of money through PTCs, which are rated from AA minus to AAA. We have been large scale direct assignment transactions. We started co-lending last year, and this all adds up to the borrowing franchise that we have built. So this talks about our off-balance sheet program. Navi Lending Cloud is a proprietary platform that we have built, which significantly reduces the time required by our investors and lenders to do their due diligence, to select pool, and to monitor their portfolio. Makes us more acceptable in the market for direct assignments and co-lending. We have been rapidly scaling up our co-lending side of it, and now we have 6 partners who are doing co-lending with us. And in the last quarter, July-September, we did around 843 crore of co-lending business. Similarly, there has been a big increase on the direct assignment side, which is visible from the graph. We have now sold our pool to more than 13 players in the market. I'll let maybe Ankit talk about our balance sheet and P&L.
Yeah, I think some of this we have already covered, but just to recap, I think these numbers are up to September. As you can see, from March 23 to September 23, our loans and debt has roughly increased by 10%, and the profit for the first half was 37 crores. While for the full for the 9 months, it is much higher. In terms of capital infusion, we have infused close to 950 crores of capital in FY23, which also shows significant sort of commitment from the promoter entity. Can move forward. Against if you look at 9 months ending FY24, our balance sheet has sort of strengthened quite a bit. Net worth has increased from 2,300 crores to almost 2,800 crores, again driven by both profits and also sale of our MFI business. The other numbers I've already talked about, right? So capital adequacy at 27%, debt to equity at 2.2, gross NPA at 2.7%, which is all pretty strong.
Yeah, and we carry very high provisions in our P&L, which is reflected in our very low net NPA of 0.36%. Yeah. Maybe we can talk about ALM first.
Yeah. So ALM, yeah, you want to talk about ALM?
So we are sitting on large cash balance because of sale of Chaitanya as well as our liquidity policy, and that is reflected in a positive, mismatch in all the buckets of our ALM. Our liability profile is much longer than our asset side profile as well. So both these things, high equity in the business as well as longer liability tenor, helps us in keeping a very, very positive ALM in the business, which is key to running a successful NBFC.
Go to the collections right now. So in terms of collections, again, I think that is one area where we have invested a lot in the last, I would say, 12 months or so. In terms of our collections, it's structured into 3 parts. One is digital collections, where essentially from the day when customer bounces to 29th day after the bounce, which is 29 DPD, there's a lot of intelligence which goes behind digital collections where we intelligently interact with customers through multiple communication modes digitally. And also there is a 300 plus strong in-house telecalling team, which is now increased to roughly 400 people. So this telecalling team helps in collecting the maximum amount of money by the 30th day. And post 30 day, although there is some telecalling, but majority is through field collections between 30th and 89th. And this field collection we have slowly been putting it in-house through our own agents. Currently, about 20% of our field AUM is covered by in-house agents, and the idea is to increase it over next few quarters. So I think that is one big sort of development at our end, that I think building out of this collection infrastructure at large scale, where we will be collecting from customers on the field across many cities. And I think this is one area this is one thing which will also give us confidence as we scale up our business, and also leads to better collection efficiencies and lower credit costs.
So Vikas has covered the issue structure, but I'll summarize it. It's a 300 crore base issue size with a green shoe option of another 300 crores. It has 3 tenor options, 18 months, 27 months, and 36 months. And coupon frequency is monthly for the 18 month, and then for longer tenor, it's monthly and annual options are there. There are no put and call option, and this will be listed on BSE and NSE. And allotment will be on a first come first serve basis, and issuer reserves right to close the issuance early, even though the scheduled closure date is close to, I think, 6th of March. So we look for participation from your side sooner than maybe waiting for it. And yeah, that's about it. Because we are.
Thank you, Shobhit. Thank you, Ankit. We can take any questions from the investors. So we have first question. Can you please share some information on divestment of Chaitanya India Financial Credit Private Limited and how was the proceeds utilized?
So this divestment process started sometime in the process we had started about 3 quarters back, 3 to 4 quarters back, and it concluded in November of last year when we got the proceeds from that sale. We got about 1,530 odd crores through the sale of this transaction overall. And Navi Finserv was holding 75% of this of the shares of Chaitanya India. So I think in that proportion it got proceeds. Yeah, and the proceeds have been utilized for the business itself. Essentially, they have been utilized for increasing the net worth, which has increased by about 600 crores, and consequently, our capital adequacy has also shot up to 27%.
Thank you. Okay. Second question is, what's the debt to equity ratio post divestment?
0.2.
Okay. Next question is on, can you please brief about the loan disbursement process as right from sourcing to the collection?
Yeah. So today we disburse loans only through Navi app. We don't have any website or branch where customers can walk in. So the only way customers can avail loan is applying through app, where we underwrite customers in 1 minute time. And then customers can complete the penny drop process, setting up a mandate, doing video KYC, and taking disbursement.
Yeah. So once the loan has been, essentially this process from customer coming to the app to taking the to the final moment of money in the account can be done as fast as 5 minutes, right? And in the best case, if customer goes straight through, the only manual process in the whole journey is video KYC, as I had mentioned earlier. So it's a purely digital process. There's a lot of computation which happens in the background in terms of data that we collect about the customer. And then we have underwriting models which work in the background to determine the credit quality of the customer. Essentially, our models are able to assess the income of the customer, obligations of the customer in terms of, and also and the risk profile. So based on that, we decide how much loan to give to the customer and also what tenure to give. And then once the disbursement process is complete, since all our customers have to necessarily set up auto debit mandates, which are e-NACH mandates on their verified bank account. So every EMI which is presented gets essentially gets collected through the auto debit mandates. About 92% of our customers pay it on time. Essentially, what it means is that on the due date, when we present the e-NACH mandates, we are able to collect money. So only 8% customers bounce, which is again one of the lower numbers that if you see in the unsecured personal loan category. And then after that, the collection process is already covered. Then there is a telecalling team from 0 to 30th along with digital collection. And then consequently, there are field collections.
Okay. Thank you. So we have one more question, which can you throw some light on the AI-based underwriting that we've discussed in the presentation? So we just wanted to understand something more on this.
So yeah, I think underwriting at the end of the day is simple underwriting. I think whether you use AI or whether you use rules or some human is looking at it, ultimately what the end outcome is, you're trying to evaluate the credit profile of the customer. So as I mentioned, see what our models do is that they eventually try to find out complex set of rules which define the credit profile of the customer, right? So they will look at various data sources. So our models will essentially from the various sources of information, which could be either bank statement that we get or from the financial SMSs of the customer or various other signals. For example, what other apps he has on the phone or any other data sources, we are able to impute the income, obligation, and risk profile of the customer, right? And so our models essentially throughout a score of risk, which you can think of something which is more enhanced than, let's say, a CIBIL score, because we have we are using a lot more data, and that what this makes the model more efficient. And the thing about AI models is that they improve with more data. So essentially, they are pattern recognition kind of machines, which essentially, as you show them more data, essentially you show them a good customer, you show them a bad customer. As you show them more good customers and more bad customers, they learn more. And then whenever the new customer walks in, they are able to better determine how this customer will behave. So that's how this AI-based underwriting has evolved. And the beauty is that with scale, it improves, right? So essentially, the proprietary algorithm that you create essentially becomes better and better with scale. So yeah.
Next question is on the ALM. So can you take us through the ALM management of Navi Finserv?
Yes, I think we have a very strict sort of ALM policies and almost real-time monitoring of that, right? So obviously in our I think in that slide deck we saw that we are cumulatively positive in every bucket. So what it means is that even from the very early buckets, we maintain a lot of cash. So at any point of time, the amount of cash plus investments that Navi Finserv will be more than 10% of the balance sheet, right? So essentially that's what we always retain as cash, which helps us with. In terms of our LCR coverages, although I think the RBI mandated minimum might be around 60 or 80%, I don't remember, but we have on an average maintained much higher than that, close to 200% or so. So yeah, I think from a liability perspective, we like to be conservative, and in ALM we monitor it very, very closely, right? And also we anticipate, let's say, events where ALM could be stressed. For example, if some borrowings is getting delayed, then we will essentially alter our business accordingly to suit that. So, but I think what has happened over a period of time is that we have gained a lot of trust with our lenders, right? Both on balance sheet and off balance sheet lenders. So I think today the situation is that we have more than enough demand from people who want to give money to us. So essentially that also helps us in our liquidity situation.
Thank you, Ankit. It gives us more clarity on this perspective. We have a next question about the utilization of the funds that we are proposing to issue in the upcoming public issuance.
Funds will be utilized for onward lending and to grow our AUM. This is part of our regular fundraising activity. So yeah.
What's your overall exposure of loan book in terms of the classification between the secured and unsecured loans? If we can have some mix of that.
But 10% of our AUM will be secured, right?
Yes. Personal loan is entirely unsecured, and that is 90% of our AUM.
Yeah.
So basically, in terms of home loan and personal loan, it's the more or less the thing.
Yes.
Between the secured and unsecured. Oh. I think we are done with the question and answer session. So just to conclude, dear friends, thank you very much for joining us. As we have heard and seen the attractiveness in the offering that Navi Finserv is proposing to issue in the upcoming issuance, may I request your wholehearted support by reaching out to the all segments of investor class, typically the retail segment. You may reach out to the issuer, the lead manager, or the consortium member for any information or clarification. They are available to clarify on any of these queries which could not be solved on this call. I thank you all for taking out time to attend this session today. We shall look forward to your wholehearted support as it's always been. Thank you so much.
Thank you. Thanks for your time.
Thank you.
Thank you.